All right, I appreciate everybody who made it to another stream, right? Getting your analysis, getting your information in, and learning, right? Sitting here on a Tuesday night, trying to understand where we're going for the week, what is happening, right? Again, I appreciate and applaud every single one of you here trying to get some better information today. So, what we're going to be talking about today, and I'm going to get into Bitcoin and ETH first, as far as direction analysis, what we're looking for, right? As far as Bitcoin and ETH for our crypto majors, but I'm going to show indices as well, why I like to look at indices for overall direction, right? And we'll talk about a little bit of that. And then we'll talk about our disproval theory, how we can disprove our style of analysis, how we know it's wrong, and why we want to know it's wrong in certain situations. And then we will also talk about a little GBP setup that was just present earlier this morning, how it was present, how it came to availability, and why retail was on the wrong side of the market during that entire time. So we don't need to worry about this right now. We'll just get straight into Bitcoin. Understanding what we're doing, right? Top down analysis. We'll go from the weekly to the daily, all the way down until we can understand where we're at. So right now, looking at a weekly time frame, right? Obviously, in some type of bearish structure from this high that caused a new low, we came down, mitigated demand, right? We have unmitigated demand below as well. Not too worried about that right now because we're worried about structure that is most present, right? So we can see price came down into these areas, this rally-based rally that brought price obviously higher into all-time highs overall. It came down, mitigated that, showed right a move to the downside right here. You can see a drop-based drop within this weekly price action, showing the amount of shorts that are getting into trades right within these areas, trying to continue to take this to the downside. What do we see happens after that? Right, we see the shorts that are present, we see the liquidity rate to the downside, and then the early longs are taken out, right, and we start to see a retracement back into areas that caused a new low. Now let's go to the daily. All right, understanding the daily, right? We saw that drop base drop like we were talking about before. We saw how it came into these areas, broke that structure point upside, and then from that introduction of demand from this liquidity rate to the downside right here, right? We continued to create higher lows, higher highs, and from that we are seeing that pullback, right? How that actually happened and how we got up into those areas. So understanding the daily and understanding our daily structure, looking at these areas right here, right? I'm only worried about the candles, so don't really mind the wicks too much until we get to the lower time frames, right? I'm looking for candle closures, strong displacement on the daily, right, to tell me that it wants to go a certain way. So understanding our daily structure, right? We had a break of structure to the upside right here out of the entire range, right? This is your candle, this candle that had closed over, right, this high right here. So this area was where demand was introduced that brought us out of the range right here. We can see we came up, right, took out all the early longs that were present trying to get in trades, and then once we did that and mitigated that demand, that broke us out of this zone right here, right? We saw another liquidity raid and then the continuation from that. So where was that next introduction of demand that we had talked about, right? Well, I'm looking over here, right? We can see a large fair value gap as well within the daily time frame, right? Within this area right here. After that liquidity raid and then break of structure to the upside to continue our move to the upside. Now, this is where it gets very interesting, right? Because we're trying to understand, well, where are we at as far as premium discount? Where can we look to take any trades and etc. So understanding this right here, right? From the introduction that we had talked about before all the way to the highest high at this point in time, right, we can see that we're still sitting in premium of this daily range right here, starting to create a lot of long liquidity as we're coming out of this area as well. And then we can see the wicks to the upside showing us that highs are being manipulated. It's getting shorts out of trades, right? Anybody who is trying to short any of these levels, they see one move to the downside here. They said short, 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 put their stops over this high. They got stopped out. So they said, I'm going to short it again. They got stopped out again, right? And we can just see that manipulation of the shorts versus the longs. We're starting to see those lows being held, right, every single time. Um, Around these areas, holding, showing that sell side liquidity that is available. So this tells me that we could see some possible downside, right? We have an area to possibly go to if we see downside. We still need that market structure to fall in place, right? We need that displacement to the downside that shows me that shorts are now in control, supply is in control, and then I can take this trade to the downside within these areas, right, of demand, this large fair value gap, and we see some sort of situation, right, where we get these shorts still present in trades now that they've been manipulated out, but then we slowly, right, accumulate into those areas, break structure, and continue to the upside to mitigate those areas higher on supply, right, and overall. The reasoning I'm looking for this, right, It's the same reason I'm going to be looking for this on indices. And I will show you that in a second. But understanding that we are sitting in premium, consolidating in premium, showing a lot of long liquidity, right, and manipulating highs, that starts to tell us that we could be in a possible distribution scheme within these areas right here. Now let's go down to the 12-hour. Right, we can see that large move to the upside again, that area that is unfilled within here, and then that large candle that broke structure to the upside on multiple time frames. We saw the 12-hour, or sorry, the daily, right? Break structure to the upside. We saw the 12-hour, that same exact candle. So this area holds a lot of demand as far as taking trades to the upside, right? Obviously, we need to confirm this within those areas, but right now, right, this is what we are looking at as far as continuation to the upside, because that's what we are looking for due to the overall narrative, the overall structure that it is giving to us right now, until we are proven wrong, right? And we'll talk about that in a second when we talk about the disproval theory. So price is continuing to the upside right here. We have a lot of long liquidity. This is the 12-hour chart. We'll go down to the 8-hour now. We can see as we are manipulating highs, leaving all of these lows within these areas, right? Again, all of that long liquidity. Price makes another high. We come back down, raid lows, and then we make another high, and this is where we get that wick, right? That show of possible algorithmic introduction within the top of the range. Price pushes up, right? We see that wick over past this high, and then we see price push all the way back down. It puts in that gravestone doji pattern, right, showing that supply is in control within this candle, because price was pushed all the way up, right, and then immediately pushed all the way down. Liquidity raid, right, we took the shorts out of the market and then continued to the downside. So we do have some possible supply introduction within this area. Let's go to the 4-hour now. We can see that same narrative, right, shown to us on a lower time frame. This is how we can start to do that top-down analysis, understand certain areas that we will look to possibly trade off of, as well as the long liquidity that we are currently still building. So you can see long liquidity here, right? I have a demand zone here as well at 23,208 that we could come into after filling this fair value gap, mitigating this, and then continuing to the upside. If this were a distribution to then reaccumulation, and this price action right here, right, is building up all that short liquidity for price to then reaccumulate here instead of going areas lower. Remember, this is that daily structure that we were looking at right here. Personally, I would not like to see us come down here with displacement. The reasoning for that is, right, this was that breakout to the upside. Right, this was that demand mitigation of that breakout. So the confirmation of that came from here, and then price broke structure to the upside, right? So if we were to close with displacement down in these areas, right, where price introduced demand, then that is not what we want to look for. We want to look for that buy side, right, liquidity being built, reasoning to continue to the upside for our overall bullish narrative. So let's take that out. Let's go back a little bit. Right, so we could see some possible reaccumulation within this area as well, mitigating this fair value gap as well as demand, and then continuing to the upside overall. But right now, right, it's still bullish to me until I'm proven wrong. And we'll talk about the disproval theory as well. But let's go ahead and jump into ETH as well real quick. All right, very, very similar. I personally feel as if ETH shows the picture, the story a little bit better. Just me personally, right? You can or can't agree with that. That's completely okay. But right now, understanding our weekly time frame, right? Similar story. We had a breakdown of these lows right here, and then we saw this high and the low created, and then we saw that move to the upside following, right? So our breakdown occurred, displacement occurred, area of supply, right, higher within this range, from this range breakdown over here, and then we saw that high, low created, then the break of structure, and then we started to see price move to the upside. So let's go to the daily now. Right, that area of redistribution, that drop base drop, right, brought this redistribution as well, created a lot of short liquidity within these areas that we had pointed out last time we were looking at ETH, right? All of these shorts putting their stop losses over this high, this high, this high, this high, right? We can see we even came up to these levels and rated that liquidity, right? Brought that one liquidity raid to the upside, mitigated some type of supply up and then here, and then we're starting to see some type of pullback. Let's go now from the daily, let's draw our daily range. Apologies. Again, breakout to the upside, high that caused a new low. We see that move to the upside right here. This candle ends up closing over, right, these candles over here. So we have another range with imbalance as well left within here, right, that imbalance that was left. So if I'm looking for my most recent demand, right, to draw my range, looking for something similar, right, that lower time frame range within here, and then we talked about that liquidity rate on Bitcoin, right, for that higher time frame narrative as well. We can see we're still holding that premium within the higher time frame narrative, but within our lower time frame range, we are also in premium. Let's go ahead and take that out. Let's go to the 12-hour now. Understand this price action within here. We can see obviously we're still creating higher highs, higher lows, continuing to the upside. We saw that fair value gap introduction of demand after a liquidity raid, then distribution to then accumulation, continuation to the upside, reaccumulation within this area. And then we see again that same exact thing. We have another fair value gap, an area of imbalance within this price, 1846 to 1712 roughly. If we can reaccumulate within that area, like we were talking about for Bitcoin, for that demand that we had mentioned, right? Again, reaccumulate, continue to the upside. But if we continue to leave these lows and take these highs, then we will be looking at some type of possible distribution schematic. Obviously, we can then confirm that once the breaks of structures to the downside are given. So again, right now, very, very choppy price action. Understanding that we don't need to be in trades at this point in time, right? If you're sitting here trying to stress yourself over getting in any trades like this, right, then I don't think you should look, right, to take positions on a lot of these coins and try to swing, right? The reasoning for that is because you get in these situations like this, and then you enter a trade, and if this is redistribution, right, and let's say you were trying to long from all of these lows, whatever, higher low, higher high, you want to take it to the upside. If you were trying to long and you're sitting there holding within this choppy price action, nothing is confirmed yet, right? If it's redistribution or reaccumulation, or accumulation or distribution, it is not confirmed yet until we get that final break of structure, right, out of the range. So sitting here trying to stress yourself, trading within this choppy price action, right, and trying to catch a bottom or a top before the move happens, personally just brings stress and can bring very, very bad habits to myself. And what I believe it brings is bad habits, right? When trying to get into trades and learning it, because let's say you did long this, right, and you were or short it, and let's say you were right. Let's say you're right and you made a lot of money. What is that going to teach you to do? That's going to teach you laziness, and that's going to teach you to every time you see this, right, and you're like, oh, okay, I made a lot of money the last time I did this, right? So you just put it in again, and then all of a sudden you are down 50% on your port, right? And you're like, oh, what did I do? You did exactly what you did last time, right? You basically gambled. You looked at the chart and you said, I think it's going to go this way. I want it to go this way, so that's what I'm going to do. That's not how we are looking to trade, right? We are looking for that show of hand, that algorithmic introduction to show us that price actually wants to move a certain way. So understanding Bitcoin and ETH, we are still in premium within the range, but if we can still slowly bleed to the downside, creating all this buy-side liquidity into areas of demand and imbalance, then we can look for that continuation to the upside overall. So that was Bitcoin and ETH, right? Little 10 minutes each per, but we're going to go ahead and get into some GBP JPY, how we can dispose our narrative, as well as some type of trade that was placed today, what I'm looking for overall, and how we can take this to the upside. So understanding our weekly time frame on GBP JPY, looking within this price action here. All right, we saw a break of structure to the upside after a liquidity rate to the downside. We broke structure, continued to the upside, created a range right here, and then we rated liquidity on the weekly and then broke another structure point to the upside right here. We did not close, right, with displacement over these, but you can see we rated highs, came back down, and we're starting to consolidate within this price action on the weekly, but we are still bullish, right? So let's now go to the daily. You can see that weekly structure that we put in right here. We saw all of that imbalance that was left behind on this large move to the upside. And then what were we talking about as far as ranges and as far as trading ranges go? What are we looking for, the first or second half, right? So understanding what we're doing on the first and second half and where we're doing it is very, very important. On the first half, we can see, right, that we are distributing. Obviously, price came down to the downside, right? But if we understand that we are creating liquidity on the first half, distributing to the downside, right, and getting people in a lot of shorts within bullish structure tells me that price is possibly going to reaccumulate. Obviously, we need to confirm this with structure within, right? But looking at this right now, we can see that we had a distribution, and now we're manipulating lows, leaving all of those equal highs, right? All of these equal highs we can see very, very clean, very present within this chart right now, within this price action, to continue, right, to take this up into areas of supply from that high that caused a new low on the weekly time frame. So the daily, right, still needs that close over these highs right here for that continuation to the upside. But understanding the 4-hour and understanding that we are possibly reaccumulating, right? We saw that demand candle, that break of structure to the upside, institutional candle down here. We had a lot of lows, right, that were being left. Distribution again to then accumulation. So we're looking for this narrative, this picture that we're seeing right here on the higher time frames, on the weekly time frame. Distribution to then accumulation. Now you can see how prices fractal and starts to do literally and will do the same exact behavior, the same exact price action on every single time frame, and that's how we can convert from higher time frames to then lower time frames. So understanding that we have a lot of shorts in trades, right? We are starting to distribute and then starting to accumulate after taking out all the lows, mitigating demand, and then we are starting to break structure upside on lower time frames. Tells me that price possibly wants to continue to the upside. We saw a 12-hour break now, right? That candle before that candle I talked about, or we're going to talk about the demand within here as well, and look for some type of longs into areas up into 170 overall. A lot of space right here, literally both ways, almost 1,000 pips, right, from current price or from the demand zone up to our area of supply, right, just the top of that range, not even the 50%, anything like that. So this is definitely something I'm waiting on currently for a really, really nice trade, right? So 12-hour broke upside. We saw the daily has yet to break upside. Let's go down to the 8-hour, understand where that was introduced, and then let's talk about the trade that was within here as well. So the 8-hour, right, we saw again that longs purged, took out the lows, and then we mitigated that institutional candle. Now we're continuing to the upside. So let's go down to the 4. Again, rated lows, put a high, put in a low, broke structure to the upside, and now we're starting to move to the upside. Let's go to the 1-hour and talk about the price action within here, how this trade could have been caught, and how you could have looked to possibly take this, right? So as we are coming down into these areas of demand that caused this new high, what do we want to see? We want to see that slow movement to the downside, right? That lethargic movement to the downside to show us price wants to continue to the downside, as well as the manipulation of lows. So what are we seeing? Lows manipulated, lows manipulated, lows manipulated. What is it leaving back? Right? Highs, highs, highs equal highs, relative equal highs, right? All of this short liquidity is retail getting comfortable in shorts and then automatically placing, right, their trades or their stop losses right here. Let's say they get stopped out when it comes up into that area, or it's going to, and they're watching it. So then they're like, oh no, let's move it up here because it's going to continue to the downside. Maybe even up here at this supply zone, right? This is what they're going through in their thought process as far as when price is moving to the downside. So they want to continue to take it to the downside. Apologies, my microphone cut off. I'm literally just gonna get a new one. I have no idea why it does that. I charged it for 2 hours. But anyway, right? Price is manipulating lows, leaving those highs. Comes down into that area, raids that liquidity. So now that all the longs are taken out of their trades, we see that break a structure upside. Then price comes back down in to that area, right? Mitigates that demand, continues to the upside on the hourly chart. So we saw where price broke structure right here, right? Came down into that imbalance that was presented right here as well. Structure break, imbalance presented, lower time frame demand within, right? And then we see price mitigate that, continue to the upside. This is just the hourly chart at this point in time. So let's talk about what was available within this price action. So as far as reaccumulation goes, and this is good because we can show you a lower time frame fractal reaccumulation, right? Looking at the 5-minute within this area, as price was coming down, right, creating that buy side liquidity, we rated the lows. We saw that one displacement to the downside. This candle to the downside is your algorithmic introduction. Why? Because they are moving price, right? Pushing price. What does this do? This takes out a lot of longs and induces shorts. How many retail traders do you think shorted this, right? Whether they're trading support and resistance, whether they're trading breakdowns. We see this liquidity, right? But how many are seeing this as a support zone and then automatically short it once it breaks that zone, right? or they have a lot of breakout traders, right? Will have limits set something like this, with stops over, and just have a trailing stop, right, as it continues to the downside, whatever it is. So they get their little move to the downside, right? And they're like, oh, we're good. It's going to continue. It's breaking down, fat candle to the downside. But in reality, right, instead of this breakout trade to the downside, what are we seeing as institutional traders, right? We see that liquidation of longs as well as demand mitigation and peak discount where algorithms are looking to buy, right? And then we see directly after a break of structure, right? We see that liquidation and then we see that break of structure after. And then that gives you that idea, right? That price wants to continue to the upside or has possibly put in a reversal within an accumulation scheme right here. Now, where do I look for my first break of structure within these areas, right? Obviously, the most recent high that caused a new low. From this accumulation to the distribution, we created supply within these areas, right? We created supply. So we got a displacement candle to the downside, came up to the supply. If you were right, a quote unquote dumb money trader, you started shorting this, said lower high, continuation to the downside, right? But remembering that we're in peak discount, remembering that we are creating a lot of short liquidity, right, coming down into these areas, and that we just rated a lot of longs as well as mitigated demand will not have us in these trades most of the time, right? So price break structure to the upside, and then this is where it gets interesting. So where that demand was introduced from this rally-based rally that broke that structure point to the inside, right, came down here. Now, this is where it gets very confusing because we're like, well, candle before candle theory, right? Is it working? Is it not working? That's completely fine. We'll talk about what happens right here. So we see this higher time frame reaccumulation within this zone right here, right? And then we see a long liquidity that is being built within these areas. So again, same exact scenario that we were talking about before, right? What is price doing? Sorry, it is literally right within the top in premium, right? We are consolidating within premium. What does that do? That creates those that long liquidity. Late longs are getting in trades. They look at this and they say, here's a breakout, right? Pattern breakout to the upside. They're getting in trades right here, right here, right here, trying to continue to take this to the upside. What happens, right? We then see from that distribution in the first half that we talked about. So the first half of reaccumulation schematics are always going to look like distribution because this gets smart money in, quote unquote smart money in, whatever it is, right? They see a lower low with displacement and then they're automatically shorting this, shorting this, shorting this, shorting this, trying to take it to the downside, right? They think it's a liquidity raid, maybe supply mitigation of these areas and continuation to the downside. But we look for where price is accumulating or distributing within premium or discount and what half it is. So within the first half, right, we can see that distribution. Price was distributing to the downside, came back up, took out the highs, right, and now it started to continue to the downside. So this is where it got very interesting, right, because price came up, rated the lows to the downside on the second half, right? So now we're manipulating lows and then leaving highs. What does this tell us, right? That price wants to now continue to the upside because it is getting that short liquidity into trades, getting a reason to continue to the upside after we have put in a bullish narrative, right? Bullish structure narrative. So understanding that we broke structure to the upside, right, on the 15-minute when we came down into these areas, right, and then we mitigated that fair value gap from that break of structure to the upside within this candle right here. We started to distribute within our first half and then accumulate within our second half, right, manipulating lows, leaving highs. This gives me the idea that we can now look for trades within this time frame. This is that 15-minute, and then we can go to 5, right, and then 1 and look to where that happened, how we could have gotten in trades, and why, right? So we can see on the 5-minute that obviously price broke structure to the upside right here, right, from a high that caused a low. We broke structure to the upside. This is the low that we don't want to see right here. Broke into the downside with displacement, right? We can look for a liquidity raid. Actually, no, this was right here. Looking at it at closer, right? Because we had that first move. This was a liquidity rate to the upside. It still respected this high that caused an internal low, and then we came lower, right? And then after we came lower, took out this low right here. We can see it literally pipped it. The direct candle after, right, broke that structure point to the upside. Now let's go to the 1-minute. Understand this price action within here. right? So this was your demand that caused that move to the upside. We came down, mitigated that again. Now I'm looking for that break of structure after a liquidity raid to tell me where I want to look to take my trade next, right? So this is very, very choppy price action, but as long as we are looking at the market structure, right, and understanding our narrative and understanding our rules, we cannot get FOMO or get any type of fear under distress within these situations, because we might look at this and say, well, this is not a break, right? It's looking very, very lethargic. I don't want to take this to the upside, but still understanding our still bullish narrative, as well as following our time frames, right, and understanding where demand was introduced and why, we can look at this price action right here, right? So we actually pip this high right here. Here's our first high that is taken after a liquidity raid, demand introduction within this area, and then we see that break, right, of that supply zone right here. I use the wicks for the lower time frames. The only time I'm looking for a closure is going to be on a daily time, or sorry, 4-hour time frame or higher as far as market structure goes. So we see our first higher high that's created after a liquidity raid to the downside here, and then we see that break of structure from this high right here. So your candle before that break of structure, right, lies right here. If you wanted to do this entire move out, let's go to replay, see if we can pull up the seconds and see what happens within the price action in here. If it, okay, here we go, we can, which is beautiful. Okay, so again, same type of narrative. What are we doing? Creating that buy side liquidity, right? All those equal highs that we can see are presented as we are putting in that bullish narrative. So again, accumulation, reaccumulation, right? After liquidity rate to the downside, break of structure to the upside, and then price comes back, mitigates that candle. After that move to the upside, right, comes down into these areas of this candle, reaccumulation, rally base rally, right? Break of structure, comes back down into the demand, mitigates that, and then we can look for trades higher into the range. Takes out now this, right? All of that buy side liquidity that is now presented within this available area, because we are still bullish, right? Now that that is presented, we can look for a possible supply, right, to take this trade to the downside. We can see that this redistribution that had broken us out of this range right here lies right here after an accumulation to then distribution. So we had supply introduction within these areas, could have been in a trade here, right, and taken it up to those areas right there. So let's play it out, right, and then we came up into those areas and then came all the way out actually up into this range right here, created some more demand, right? And that's where I'm looking to possibly take this trade to next, understanding the 4-hour time frame. We have created a large fair value gap within these areas that we do reaccumulate, right? Create reason to continue to the upside. We can already see buy side liquidity that is being formed, right? More relative equal highs by more relative equal highs, right? With more relative equal highs as we're breaking structure to the upside, giving reason to continue to the upside. That's what we want to see, right? We don't want to see liquidity being taken within our way and then the non-continuation, meaning we just raid these lows, come up, respect the high, continue to the downside. That's not telling us what we want to see. We want to see these imbalances created on the long side, right? All of this price action. Let's go to the daily time frame. We literally just had 3 days, right? 3 full days just destroyed in one daily candle. That starts to tell you, right, which side is on or which side is in more control on either side, just by looking at it, right? Not doing market structure, not doing supply and demand, not doing Wyckoff, not doing any of those confirmations, just by looking at it and saying that it took 3 to 4 days, right, to come down to these areas, and then we literally took out all that price action within one candle, right? That starts to tell you that supply or demand is more in control. So now that we did our daily time frame analysis, we saw this move to the upside right here. If we go to the 12-hour, right, we saw that large break of structure to the upside right here. I'd like to see displacement over these highs right here to show us that price could come down into these 161.3 areas or reaccumulate within this one candle right here on the 4-hour time frame, so we can continue to take this to the upside, targeting that supply higher overall, right? So retail was on the wrong side of the market this entire time when trying to take these shorts over and over and over again, right? Because if we are holding shorts within this price action right here, right over here, after we had that demand mitigation break of structure to the upside, we're holding shorts for literally like 3 or 4 times longer than you would be holding longs, right? The amount of profitability I made in this candle or could have made in this candle right here was within a day, literally a day. half of a day, right, from this one move to the upside right here. Or if I was shorting within these areas, right, I'm holding for hours on hours on hours on end, 3-4 days, trying to reach my goal. We can see that we mitigate that institutional candle and then just move to the upside after we get those raids of the lows right here. So as far as JPY goes, I'm still looking for that bullish continuation overall, right? We are starting to accumulate in the lower half of discount. And we'll talk about how we can disprove our narrative next, before we get into any trades or any plays like that, right? As far as GBP JPY goes, I'm going to be waiting for these areas down here to look for accumulation for then the continuation to the upside. So after GBP JPY, let's go ahead and talk about that theory now. We'll go back to Bitcoin, that weekly chart. I think I had it up here. All right, we'll talk about the disproval theory now, what it means, how we can use it, right, and why it is good in this analysis style, right? So looking at disprovals, what is disproval? Why do we need a disproval? A disproval is going to be when price disproves your directional bias. So let's say you're on the long side of the market, you've been taking longs over and over again, price is still continuing to the upside. Once you are proved wrong, so once your demand zone that you have drawn next, right, is broken to the downside with displacement, then you now have disproved your theory. You have now disproved your bullish narrative, right? Which gives you the ability to now flip it on the flip side, right? So let's understand what the disproval theory is. So as we are coming up, right, creating demand, rating lows, distributions, then accumulation, continuing to the upside, right? We have demand that is being formed on all of these areas. And once we are coming in mitigating that demand, right, from the breaks of structures to the upside and continuations, we are looking for trades to the upside, right? Constantly taking longs to the upside until we are proven wrong. So we see the next demand, right? We see the confirmation of that demand zone. We continue to take it to the upside, and then we get to this area. We make another new high, right? We look for the area of demand within there. Then we have our next area of demand from this new high, right? Once price starts to show some type of move to the downside, right, after a displacement, then now my long scenario, right, that I'm looking for after we rated highs and then broke this demand zone to the downside has now shown me that disproval theory, right? A lot of people will take this and look at this and say, this could be a flip zone. And that's entirely true, right? I look at these when I do supply and demand as the most recent supply and demand that was created, right? After, to me, once it's mitigated, there's no reason for it to be mitigated again. Instead, I'm looking for the creation of new demand or supply to look to take that trade. So what this means is when we get this break of structure to the downside, this area right here, right, the candle before that candle that broke structure to the downside over here, we'll look for that redistribution within this area to show the creation of supply, right? For now, the ability that supply was made within these areas right here, right? Let's just draw this a little bit darker. To take this trade now to the downside, targeting my overall narrative. So let's say we see the demand mitigation over here, right? Continuation to the upside, but I have demand all the way down here that has yet to be mitigated from this low that caused this high, right? Now that I've taken this trade downside, as well as I have a target, as well as I have liquidity just above my target and an imbalance, right? It now makes sense to take that counter trend trade to the downside. We end up taking that, right? And then price starts moving lower into those areas of demand. We look for the accumulation within those areas, and then once we get that break of structure, right, and then that double break showing us the introduction of demand, then we can look to continue to take that all the way to the upside from the overall bullish narrative that is being put in, right? So if we're at this trade at this point in time to where we see this demand that is unmitigated all the way within discount of our entire range, right? We had a liquidity rate to the downside here, break a structure to the upside, large move to the upside, and then we saw all this demand within this area right here. Respected, 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 not respected. Break a structure, respected, right? Respected, respected. And then we come down into these areas, and then that's where we get all these early longs out, right? from now all this long liquidity that is being created from this move to the downside right here, right? They caught it on this trade. They're trying to take it to the upside, and then they're stopped out at break even. So they try to short it once prices come into these areas or these areas because they believe they have been disproved, right? So understanding why the disproval works and how we can use the disproval is going to be in these situations when we are following price from literal range to range on higher time frames to lower time frames. If I have a demand zone that's mitigated, I have another demand zone that's mitigated, I have another demand zone that's mitigated, right? And then I have one that is broken to the downside with displacement. I can now disprove my bullish bias on the lower time frames, right, within this point in time. And then I look at my higher time frames and understand, okay, I have demand that is unmitigated within discount. That is a feasible take profit, because let's look at this and understand that we are still bullish, right? So can I realistically take a short off of this move right here and then take this all the way to these lows, right? Can I do that? No, I cannot. Why? Because it's not there yet. Was this demand broken to the downside? No, it was not. Now with displacement, it's not there yet. So I need to take it to the most feasible area, right? It could be this long liquidity right here or the demand zone. That is the most feasible area within this point in time. Let's say it comes all the way down here, it accumulates and then distributes again. That's completely fine as well, right? What does that mean? That means I'm still in profits, right? Because I took it to a feasible area, I now know I'm okay, right? I'll be completely fine if I'm taken out of this trade and it continues to the upside, right? Because I now have that feasible take profit within an area of demand that caused a new high within discount, right? Created liquidity as well. More reasonings to show me that price wants to move to a certain place. It's literally like following price, right? Creating a path or a roadmap for price, and then price can starts to respect that or deny that, right? And that's how we can start to understand where it is going next. So as far as disproving ourselves, this is what I want. I want to be disproved because then I now have the opportunity for the flip side, right? I now have more opportunity that is being presented to me because I am wrong. Instead of saying, oh, I'm wrong, screw this, I'm deleting my chart, whatever it is, right, and walking away, I say, oh, my demand zone's wrong. I didn't get stopped out because we're waiting for confirmation. Instead, we got a displacement to the downside, and then price came back up, and now I can look for confirmation within these areas, right? So we don't need to be right. We do not need to be right when we are looking to take trades. We just need to be profitable. And being profitable comes from analyzing the charts as it is moving, right? Not trying to make up your own narrative. Because like I was saying, price could have done two things within this demand zone right here. It could have displaced and continued to the downside, or it could have respected that and continued to the upside. So if I'm in this trade right here, trying to take it all the way to hell, right? Taking it to the downside, that's not going to work. It's not feasible, and I'm literally gambling because I am trying to make up something that simply is not there yet, right? So now that we are in our short and it comes all the way down to this area of demand, then we see that accumulation within these areas, right, from a low that caused a new high and within demand. Then we can wait for that break of structure, right, introduction of demand within our demand zone on lower time frames, and then take this trade to the upside from our overall bullish narrative, now targeting this week high. Right, so I just got the ability to have 2 times more profitability, right, 2 times more trades within this price action because I was wrong, right? Instead of saying I didn't know what to do, right? Maybe I got stopped out on longs, whatever it was, I was wrong. That's completely fine. Now I have more profitability opportunity, right? So that's how we can take away that being right, being wrong. You do not need to be right. You just need to be profitable. That's it, and that's going to come through that risk management, right? Part two, right? I'm literally just gonna go to the store right after this and go get a new mic. Apologies, but again, that disproval theory, right, coming down into those areas of demand, continuing to the upside. Once I am wrong, that's completely fine. I'm looking for the confirmation of being wrong, right? And then once I can confirm that I am wrong, then I can take this to the downside. So that is your disproval theory as far as what we are looking for. When we are trying to get into certain trades and why we want to be wrong in certain situations as an institutional trader. We talked about Bitcoin and ETH as far as the choppy range we are in right now, right? How we can apply now this method of institutional understanding, right, to these charts. Same exact scenario, right? Showing that long liquidity that we are talking about in this demand zone down here that we could possibly come into if we accumulate, right, from this move to the downside. So are shorts a bad thing right now? On lower time frames, no, right? If the setup is there, take it. Completely take it. If your structural narrative is there, right? You have a break of structure to the downside here, break of structure to the downside here. Where's your institutional candle that caused that, right? Within this area right here. So your setup, right? That little narrative that you have from this break of structure here. Let's draw this in black. So I have a break of structure to the downside here, right? After this first displacement. So this is confirming now that introduction of supply. So we have displacement. We came back up, rated the highs, broke that low. This shows me supply is now within control. And then I can look for that institutional candle that caused that, right? And I now have an available trade, taking it to the liquidity that is available next. This is my first take profit, right? And I now have a trade from our higher time frames, our lower time frames structural narrative that is still being built. So even though we are looking for longs, right, I still have the ability to catch trades like this. Obviously, this is the hourly time frame. On lower time frames, we can look for confirmation within these areas, which is what we might do in a second here. But that setup, right, from the break of structure, supply introduction, right, we come back into that candle, and then we continue to the downside. Target would be that weak low, right? Completely set up, good trade. Not going to tell you you're wrong, right? The narrative, your rules, everything set up, even though we are still bullish overall, right? This is how we can get or literally catch both sides and not be a perma bear or a perma bull just because structure is bullish overall. We can catch it on both sides and start to get into the literal flow of the chart. So on lower time frames, right, from the hourly break of structure downside, from that low that was taken out, if we go back into these areas, right, where's your fair value gap after that candle, candle before candle that broke structure to the downside on the 15-minute is present right here. Where's your candle before that candle? Right here. Is there an imbalance? Right here. Yes, everything, all the rules are there, right? What is wrong with this trade? Nothing. Nothing is wrong with this trade. Now I have a profitable opportunity, 7-1, right? Take it to these weak lows right here. And then I can look for narratives after this weak low is taken out. So I can say, okay, we can look for maybe this low now, right? From this break of structure to the downside, if it is showing me that displacement, right? That's how I can get into swing trades as well as start to hedge, right? How can we hedge? And I'm going to show gold real quick, a previous price action on gold because we talk about gold a lot. Let me just get rid of all of this real quick. Apologies. But same type of scenario, a counter. We literally went in depth about these trades right here. We went in depth about this short and we went in depth about this long right here. But just for the structural narrative of it and understanding what we were just talking about, as far as looking for certain trades in certain type of areas, right? As long as we are maintaining that low that caused a new high, we can still look for higher prices if everything comes into play, right? Was this short a bad short? No, this was 32-1, right? Insane trade with a counter trend trade. Are you wrong? No. Was your narrative there? Yes. Did everything respect everything that was coming into place, right? After your breaks of structures to the downside, candle before that candle? Yes, it was. So a trade was available to feasible take profits. Because I have taken this and said, I'm going to these lows because look at all these equal lows right here, right? Or look at this huge imbalance from this rally-based rally. We're coming down here, right? Can I say that? No, I cannot. We need to follow our structural narrative to understand where price could possibly go next and to get out where we need to get out. Pips of purchase, as in I'll say it all the time too, right? Is no trade is wrong if you know where to get out. No trade is wrong if you know where to get out, right? We're looking for where to get out within our most recent narrative, which is this bullish break of structure to the upside. Demands on that was down here. We could put in a possible higher low, right? So we take it to the most available demand zone, and we end up catching a very, very nice trade from that, right? And get a lot of profitability. You can walk away from this trade after you've made a 32-1, right? And be completely fine for the rest of the week because you just made 10 to 20% on your account, right? You don't need to trade all the time. You don't need to trade every day. We just want to wait for our setups, right, to come to play, wait for our rules to come to play. So then I'm looking for the same thing every time because what does that allow as well? Boringness, right? And why is boringness good? Because then we can make this a job, right? Is your job boring? Maybe it is, maybe it isn't. That's completely fine. The whole point of it is to take away the excitement and emotional aspect that trading can bring and making it a system-based, right? Like you're just coming into it every single time and looking for the same thing over and over and over again, because then that will allow, right, for the same type of profitability amounts over and over and over again on either side. Meaning I don't care where price is at. If it's up here, great. If it's down here, great. Is it showing me what I need, right? No. So then I'm not taking a trade. If it's up here, great. Did it make this whole move? Great, right? It doesn't matter. Did it show me what I need? No, no, no. Yes, yes, yes. Confirmation, right? Take it down to the most feasible area. So this is literally just about maintaining that patience until we can get into those areas, right? To where we can find trades and take very, very profitable trades to reasonable take profits, right? We saw a break of structure to the upside right here after we rated liquidity to the downside. Break of structure. What sponsored that, right? This reaccumulation right here. So now that I'm given this narrative right here, as far as a large move to the upside, as well as we do our premium and discount, right, from that low that caused a high on another break of structure, we're still in discount of the range. We're still mitigating demand, right? We're still respecting this low that caused a high. So we can still see higher prices overall. What happens? Higher prices overall, right? It's keeping it as simple as possible when we are looking to trade this, right? Literally market structure and then your breaks of structures, right? As far as where we are looking for supply and demand, and then your confirmation within those zones. That's all it is. 1, 2, 3 steps, and you're good to go. You are out of your trade, whatever it is, right? And your narrative is given because looking at this, right? Now that you've gotten this move to the upside and you got this, and then you got another break of structure, your next introduction of demand is here. Where is your next feasible take profit? The week high, right? Which is right here. So this would be either be your first take profit, and then you could take your next take profit into areas of supply overall. But the narrative, right, the setup of it is taking it to that next week low or next available liquidity, or the feasible take profit as far as counter trend trades go, right? So this is how we can get into swings and start to hedge as well. Because let's say this certain situation happened right here, right? You were in this long, and then your structural narrative happened right here. And you're still in this long. You took partials at this high, right? After this high was taken out to the upside right here, that weak high that we were talking about. And now you're within this price action right here. You're still in your long, right? Maybe you have 85%, 75% out at this point. But you're still in your long. How can I hedge this, right? Where's my structural narrative? Break a structure, candle before that candle, right? Trades directly into that, and then we come downside more. We see a drop base drop form. We see accumulation to then distribution after mitigating that candle before this displacement to the downside right here, right? We show this from this low, displacement, fair value, drop base drop, area of redistribution, right? This is the 15-minute. But we can see break, confirmation, right? We come into that area, take a short, take it to the next available demand zone because this is counter trend, right? What happens? You just made 2 times the profitability if we draw this out. All right, let's just do the top of the candle. Let's make it all stupid. Crazy sniper entry or anything like that. We'll do the top of this high as well. But just down to that demand zone, right? You got a 9-to-1 to the downside or a 10-to-1 to the downside on a 15-minute time frame. And then you hit your 100 or your 50-to-1 right within this trade right here. So now I have the double the profitability because I was wrong. Let's talk about that disproval theory right here, right? A new high is formed right here. We come down, raid that, and then we come up into these areas, right? Where's your next demand zone from highs or lows that cause new highs, right? We see a low, a high formed, a low, a weak, a strong high formed from a weak low because it did not make a new high, right? But let's look at where the lower time frame breaks of structures occurred. So we had a lower time frame break of structure right here to the upside, right? So we have demand, Let's talk about the disproval theory real quick. Demand, right, as we come down into these areas, we can see we mitigated that and then possibly broke structure right here, right? Where's your next demand zone? Right here. Where's that disproval coming in? Right there. Where is the confirmation of that disproval? Right there, right? Let me check the mentions real quick. But anyway, right? We saw price disprove us to the downside right here as far as the longs go. So I'm not still looking for longs at this point in time. And then we come back into this candle, right? This displacement from this breaker structure to the downside, originally this fair value gap, right? And then we confirm that supply creation within these areas right here. So now that I am proved wrong as price is moving up on my longs, then I'm not adding positions or anything like that, right? And I'm now looking for the downside. I go ahead and take a look at this and say, okay, I have my next demand zone right here, as well as I have a lot of long liquidity present, and an imbalance from a reaccumulation that broke us out of this range right here. Perfect take profit, perfect feasible take profit, right? And now I can take trades to the upside and to the downside, still looking for that same exact narrative. Same thing, both sides. Doesn't matter what it is, right? Because we are looking for just our rules, and then once our rules are given to us, then we can look for that continuation. As far as XAU goes, I know I've been posting this one for months. This setup is starting to take a little bit of time away from me, but just understanding that what we are doing as far as our narrative, right? Again, we had lows that created new highs. Sorry, this is kind of messy, right? But we still have daily equal highs that are present. We still could come up into these areas of supply, take out these early shorts, and then continue to the downside, as well as we're creating sell side liquidity. So we are ranging right now. Retail does not know if this is going to continue to the upside or the downside. So they're starting to get in longs or shorts, right? Setting their stops over higher highs or lows. Right now, as a retail perspective, right, from a retail perspective, I would look at this and say, well, this is huge bearish engulfing to the downside. I'm going to set my stops over these highs. Is that present? Sorry, is that present? Yes, it is, right? We can see those relative equal highs within these areas right here. That shows us that retail is doing that same exact thing, right? They're shorting this to the downside. So we could possibly see something like this to where we accumulate, take out the highs, right, and then distribute, and then I'll be looking for shorts to the downside. Or, like I was saying before, if we continue to accumulate in areas below down here, right, don't leave any lows and just start to break structure to the upside with displacement, then we'll look for that continuation overall out of the supply zone into higher areas of supply overall. So that is right XAU. Before I got anything or tried to end anything real quick, is there any questions on either charts or what we talked about today? If you would like to, feel free to unmute yourself and talk about it now, or just talk to me in chat, or we can DM or anything like that. I am getting a crypto chat. I'm going to look at that real quick. XRP, baby, let's get it, Sir Trades a lot. I got you. So let's go to our watch list real quick. I'm going to do the USD Chi chart, actually, not the comparison symbol. Take a look at XRP real quick, see what we are possibly looking for next within these areas. Doesn't even want to pull it up for me. That's awesome. See if I can press it here. Nope, doesn't want to do it. Okay, I'll just do it from this watch list. Apologies. XRP, USDT. Okay, this chart is very interesting. Let's go to the weekly. All right, a lot of accumulation, taking out the lows, right? Leaving a lot of highs. We can see these equal highs on lower or past price action, right? That we ended up breaking out to the upside. The sponsorship of that, right? After a liquidity rate to the downside, which was present here. Lick rate to the downside. Let's draw that lick rate out. I have the liquidity rate to the downside and then that breaker structure to the upside. So we had demand that was introduced within these areas down here. We can see that weekly, that fair value gap that is present right here after this move to the upside. So we have the start of it right here, right? This was where demand was introduced after that liquidity rate overall, right? First liquidity rate, price came up, broke structure, right? On your weekly time frame, came back down into those areas, rated more liquidity, and then we have another move to the upside, which we are currently mitigating right now, right after that fair value gap tap. Let's go to the daily now. Take a look at this price action within here. We had a redistribution, right, from a high that caused a new low after a liquidity rate to the upside on the daily. Then we continue to the downside. Here's your displacement candle right here, candle before candle, right, lies within this price action right here. Let's draw this out as a supply zone. right? And then within these areas, we are seeing that we are currently mitigating that, but still showing daily bullish structure within this price action right here. I do like XRP if we can either take out late longs, right, and then come mitigate these areas down here from this large move to the upside, this fair value gap or imbalance down here, right? Take out these early longs within this range that are starting to be built up. And then once we do that, we could see something like this, right? Where we leave all of those highs that we are currently seeing right now, right? Come down into this area, break structure to the upside, and then continue overall. Put in a redistribution or a reaccumulation, right, underneath that supply zone. Because as we're seeing, we're currently wicking up into it a ton, right? Which is telling me that supply is starting to get exhausted within this price action, right? And let's go to even lower time frames. We can see that same exact thing. So as we come up into these areas and then start to move lower, we can see all these green candles, right, are completely over trumping all of this downside price action almost over and over and over again. So from the daily to the 12 now, looking at current price action within here, we have this low that caused a new high. We have an area of demand after a liquidity rate to the downside right here. So we could possibly continue to the upside right here, but I would like to see that bearish market structure to the downside in these areas of fair value that caused a new high overall. But if we can see for the 4 hour, right, if this high is broken right here at 3813, right, we have a 4 hour break of structure to the upside right here. Let's look at the hourly. No imbalance or anything quite yet. That is showing me that the demand is present. We just came down into these areas, created some long liquidity, right, from this internal break of structure to the downside here. This high that caused a low. We have a supply zone from that next liquidity rate, supply mitigation continuation to the downside into areas of demand. So we could either see price do this, right, where it creates more short liquidity after coming into these areas and then goes downside like we talked about before, or we could see a rate of lows, right, and then more accumulation and continuation to the upside down here at the 36 price action area. But I do like XRP overall as far as upside. I don't really look into fundamentals or anything, but I do know that there are a lot of XRP maxis out there. We have our very own here in Playbit, right? So it trades a lot, but from what was being shown right here, right, I do like XRP overall. Is there any more questions or anything like that before I go ahead and end this stream here? If not, right, this is going to be posted to YouTube after. I appreciate everybody who joined again. Any questions, anything like that, feel free to DM me or drop it in chat, right? Whatever it is, so we can get that answered. But again, thank you everybody who had joined. Thank you for getting to another session stream and all the plays that are coming out. Yeah, LP Maker real quick. But all the plays that are going to be coming out will be posted as far as sentiment goes, and I will post Bitcoin and ETH sentiment directly after too. So let's go ahead and take a look at Maker. I think I actually have it on this list. Yes, I do. Perfect. All right, so we talked about that one area supply, right? I believe Cashew Can was the one who hit me up about this, and I showed him this demand zone right here after this break of structure to the upside, right? Our candle before that candle was right here. We broke that structure point to the upside and then came into that area of supply from this fair value gap from that high that caused a new low, right? So if we draw this out like this, from this high right here, right? After a liquidity rate to the upside, break a structure to the downside, and then we saw that displacement, whereas the start of that, right, within this price action, within this area right here. So we came in, rated all of the highs from this short price action right here, right? Shorts were right here. We could see that all those equal highs that were presented right here. We rated those highs and then immediately after showed a large bearish engulfing candle to the downside, right? If we look on the 12, we can see it like this. The 4 hour, I think this actually happened within. Oh, this happened within an hour. How long was this? 15 minutes. Wow. Okay, so we came up and wicked that supply zone, right? And then immediately broke structure to the downside following. This isn't really what we want to see as far as breaks of structures go. This looks like supply is respected a lot more than demand was, right, at this point in time. So if we look at our higher time frames to find a possible spot to try to take a trade, saw the liquidation rate to the downside, break a structure within this area. So I have this area. That price traded back into, and then my next area of demand lies within this fractal wick right here. Let's go to the daily, look at these areas right here, and understand where price could possibly go next. right? Same exact thing. Another daily breaker structure to the upside, currently mitigating that fair value, right? As well as we have this demand candle right here. So we talked about that higher time frame demand, and then we have this imbalance that we are currently mitigating as well. Well, our daily structure, right, has shown some bearish pullback internally. So meaning, if I were looking for areas at these lows to possibly take this to the upside after a possible demand mitigation of this 935 area, or if we accumulate right here, right, show displacement to the upside on the 4-hour, then I can look for a trade to the upside that way. I do like Maker. I just don't really like this wick into this supply zone that we had created, right? But this could also induce a lot of shorts. So as long as we remain, right, bullish from that bullish narrative standpoint, we can still take trades to the upside as long as those rules are given to us. Just because it may look a certain way or you don't like it or whatever it is, right? As long as your rules are hitting, then continue to take your trades, right? So with that being said, I don't think there's anywhere else. I'll give like 20 seconds if anyone else wants to ask anything. I think stream chat. Oh, you're welcome, anonymous spread. No problem, brother. I appreciate everybody as well who does feedback. That's really awesome, right? Keeps me going. I like to see the feedback to see what you guys either know or don't know, right? As far as what you want to see next, right? Because a lot of the times I just don't want to sit up here and ramble in front of you guys. I'm trying to give you guys right actual info to digest, to take to the charts, and to use yourself, right? So, with that being said, again, thank you everybody who had popped out. This was recorded. This will be posted to the YouTube. Any other questions or anything like that, feel free to DM me or drop it in chat. I appreciate all of you, and I hope you guys have a great rest of your night.